gold is actually in scarce supply. People are struggling to get gold. China and India are the biggest buyers of gold. Gold is a strong value investment in China. Gold only makes up around 1% of global investment portfolios. People who want preservation of capital surely are going to invest some of their money into gold. The bad news out of Europe is still to come. I think we've been drip-fed a lot of the bad news, and there's going to be more quantitative easing across the globe. The only way to get out of debt is to inflate your way out. We can't increase taxes to try and pay it off. Inflation could start to creep up, and we're seeing it in the mining industry already. I think that you're going to see a lot more bad news coming through across the world, and that should bode well for gold. The all-in cost of the industry to produce an ounce of gold is probably around $1,400 per ounce, all in. And that is capital expenditure, operating costs, soup to nuts. That doesn't leave a lot of margin at $1,500. We're going to need higher prices than that to sustain the industry over the long term. Because if we're going to replace the ounces that are being mined out, given the fact that we're seeing lower grades coming through, discoveries are smaller in size as well, we're going to need higher prices to sustain the industry at 70 to 75 million ounces a year into the future. Otherwise we are going to see curtailment of projects, we are going to see rationalization, possibly more consolidation. And consolidation doesn't always mean that you add production. It often means that you can cut some of the higher cost production. So that would be a likely outcome if we saw gold prices going down to some of the forecasts that are being given. The analysts, by and large, are still calling gold long-term at around about $1,300. That's going to be very difficult for the industry to sustain itself over time. So we think it'll likely be higher than that, but we are using a conservative price in our business.